we have talked a lot about individual insurance policies. That's what everything we've covered has been about. But there is another way to acquire insurance, and it's through a group. Some neat features about group, and the reason many people like to join certain groups is because it gives them the ability to get relatively inexpensive death benefit. Now, you have to remember there's a couple of major rules that have to be followed. First of all, a group cannot be formed for the sole reason of let's all join together and go buy insurance. The group has to have another reason to exist, not to buy insurance, right? So one of the biggest groups, the group that most often does this, is the employer-employee group. Have you ever had a death benefit, insurance provided as like a fringe benefit through work? It's very common. So again, your group is formed because you're employees of your employer. So that's your reason to exist. And then as a fringe benefit of that, you're able to take advantage of group life insurance. So the employer, if it's an employer-employee kind of situation, the employer sits down with the insurance company and kind of figures out how they want to structure it. Typically, group life insurance through your employer is going to be term insurance because it is the cheapest form. So usually it's term insurance. And they'll decide, well, are we going to let them cover their spouses? Will we let them cover their kids? That type of thing. And the employer makes that decision with the insurance company. And then the employer maintains what is called the master policy. There's only one policy that covers everybody, and the employer kind of hangs on to that. And then each of you as an employee are given a certificate of insurance. It's proof. It's like a one-page document, and it's proof that you have the coverage. It'll tell the insurance company's name, usually your employer name. You'll be listed as the employee. Death benefit will be listed, and then if you're allowed to cover your spouse or kids, they would be listed and the dollar amounts that you can cover them for. So it'll all be on one page, so it's proof that you do have that coverage. But you do not get the policy. The master policy is in the hands of the employer. You get your certificate of insurance. You have group underwriting applied, which is very, very liberal. Okay, you're an employee of this employer who's offering this group life insurance as a benefit. The theory with the insurance company and the actuaries, the underwriters, they go, if you are at work, you're well enough to be at work, we're going to assume you're well enough, to be part of this group and we'll cover you. So they can't go to any one person in the group and say, we're not going to cover you, you're too sick. Can't do it. That's the nice thing about group coverage. It sometimes is the only way some people who maybe have health problems are allowed to get some life insurance. So it's a great, great feature, if they're able to do that. So group underwriting is very, very liberal. It's pretty much non-existent because they consider you're well enough to work. Now, you do have to meet eligibility. Usually the biggest eligibility thing on these kinds of things through the employer is you have to be a full-time employee versus a part-time employee. Usually there's some kind of eligibility requirement that has to be met. And what are some eligible groups? We've talked about the employer-employee. That's usually the biggest, the most popular. You can have that debtor-creditor, that credit insurance that we talked about. If you have a loan, they can say, would you like to take out credit life? So if you die early, your loan's going to be covered and the death benefit will pay out to the person you owe the money to. That's another group. Labor unions can offer insurance to their members, and also certain associations will offer life insurance. For example, AARP or the AAA, they offer group life insurance to members of their association. So again, it's another way. Sometimes if you're looking for some cheaper insurance, if you can become a valid member of a certain type of group or association, and if they're offering, a death benefit, for example, a life insurance policy, it's a great way for you to get it. You just have to join the right group. Let's talk about group conversion. So you've been at this employer, you're getting your group life insurance, it's term, it's great, but now you're leaving the group, you're leaving the employer. What happens? Well, there's a couple things that have to happen. First of all, you have to have been covered under the group plan for at least 5 years. So let's say you meet that requirement. Well, then you can have the ability to convert if you do convert, you have to go to some type of whole life policy. They will not let you convert a group term policy into an individual term policy. It has to be some type of cash value policy, okay, whole life. So that's one thing. One other thing is you have to do the conversion within 31 days, and you do not have to show proof of insurability, meaning that you don't have to go through a physical as long as you do the conversion within that 31-day period. Now, think about this. You're going from group to individual. That right there should indicate to you that the premiums are going to what? Go up, stay the same, or go down? They're going to go up because you're going from group, which is always cheaper than individual, right? And you have to go from your term policy and you have to go into some type of whole life policy, cash value. Premiums are going to be higher. So it makes two reasons why a conversion is always going to be higher premiums, because you're going to individual and you're going from term to some type of whole life. So that policy is always going to cost you more as an individual. That is oftentimes the reason why people don't do the conversion, is because of the cost. They just simply can't afford it.